Hi everyone, I'm Mark. Another gorgeous spring day. I'm going to start with my stock in focus today. I'm looking at FTSE 100 listed fund manager Schroders. Now, the company's had full year results out earlier and the forecast beating numbers they were too. Net inflows of £1.1 billion, asset under management up 27% to £387 billion, pre-tax profit up 6% to the full year dividend up 7% to 93 pence for the full year. That's about 2.9% yield on the current share price. The numbers are all the more impressive when you consider that the asset management industry really hasn't had the best of times lately. And what I like about Schroders is that it's not just reliant on one sector for its income. It was strong demand from institutional clients that helped offset the outflows from other types of clients the business deals with. Now, it's also announced today that it's going to ditch quarterly reporting and it's only going to publish half-time and full year results from now on. Well, I think this is a good idea, especially for long-term investors who sometimes get spooked when companies are reporting every 5 minutes, shifts expectations and the share price moves around so much more. Schroders, though, did say it would still produce a regular quarterly statement of assets under management, so it's not all change. The shares, by the way, down about 3/4% at £31 today. They are at the top end of the range, to be honest, hit a high of £34 in 2015. I'd like to own these shares, but I don't really like paying more than £30 for stocks, so they're going onto my watch list. Maybe you'll take a look too. Finally, it's FTSE Rejig Day. Every quarter, the FTSE's, the UK's top listed companies are assessed for relegation or promotion from the various indices that FTSE runs. That's a bit like the Football League, really, if you like. The companies are judged on their market capitalisation. Now, that's just the number of shares that they've issued times the share price, and it gives you the market cap. Today, in the FTSE 100, the Premier League, if you like, electronics retailer Dixons Carphone has been demoted to the FTSE 250 alongside outsourcing company Capita. Now, Dixons Carphone shares have trickled lower over the past year, but I think this is slightly overdone. The dividend has been rising at the company, and the dividend cover, the number of times it can pay the dividend out of profits, is an impressive 3.17 times. Outsourcing firm Capita, though, has seen profits really plunge and business has really slowed. It's blamed Brexit for some of its woes, but the chief executive is also now leaving the company, and the shares have all but halved over the last 6 months. I'm not a fan. Now, both these companies are being replaced in the FTSE 100 by investment trust Scottish Mortgage, and also pest control company Rentokil Initial goes into the FTSE 100. The FTSE 100, by the way, hit an all-time high yesterday. Today it's taking a bit of a breather, down about 3 points at 7,380. Not a bad start to spring. I'm off to enjoy the sun now. Have a great weekend. I'll see you next Monday, but please do share, subscribe, and follow me on Twitter.